Hello everyone, and welcome to the PivotBoss Monthly Market Outlook for June 2024. Thank you for joining me here today. My name is Frank Ochoa, also known as PivotBoss, author of the book Secrets of a Pivot Boss, and I run the PivotBoss Premium Trading Room here that you can find us at every single day. Thank you for joining us here today. We have a lot of charts to cover here today that I've handpicked here, and as always, if you have any charts you'd like me to look at, please put it in the chat box here, and we'll get to it when appropriate. Before we get started here, for those of you that are Swing Trade Pro 2.0 members, we will be hosting another round of live sessions coming up. It's coming up fast approaching next week. If you go to pivotboss.com/profits here, you'll see the schedule for our members. This is for members who have been in Swing Trade Pro 2.0, and for those who are new to Swing Trade Pro 2.0. These are free live sessions coming up in just under 8 days here. This is the schedule that we're going to keep here. This is going to include some new blueprints based off of some of the trading blueprints that we already have available, and we're adding option spread blueprints to them for actionable opportunities. If you are not already a member of Swing Trade Pro 2.0, this is the best time to join right here. The cheapest price you'll get, and there is also a free month of our premium trading room added as a bonus as well. So you also receive a free month of our premium trading room if you are a new member to Swing Trade Pro 2.0. If you're asking what Swing Trade Pro 2.0 is, it's basically, I call it a swing trading course, but this is a course that you can use the 10 trading blueprints in any time frame, whether it's a swing trading approach or whether it's intraday. It's basically includes blueprints here to help you identify rejection days and rejection trade sequences that allow you to find entry opportunities along the way when you're in a current development or a developing trending move. And so whenever we see a major rejection in the chart at any extreme, it begins a sequence of a trade sequence that we can then identify major types of days along that sequence, anticipate where the action items are, where the entries are, where the re-entries are, where you can defend your trade, where the stops are, and where the targets are. So these blueprints here, super helpful. And what's great about this trading program here is that you don't need any specific software. So I know a lot of you may use Thinkorswim or NinjaTrader 8 or TradingView. It really doesn't matter. These blueprints can be used no matter what your platform is or which platforms you may use. It's basically kind of an all-encompassing approach to price-based analysis and identifying major turning points in the chart, and then being able to engage those opportunities with confidence. So again, this is the best price available for Swing Trade Pro 2.0. You can take advantage of it. The flash sale deadline is June 11th, so take advantage of it, and you'll also receive a free month of our premium trading room. The link has been posted in the Zoom webinar here, so if you scroll up, you'll see that link. You can click on it right off the bat, or you can just go to pivotboss.com/profits to take advantage of it. As always, 100% money back guarantee, a full risk-free offer here, and a ton of great content that's already included on the on-demand training. And then every once in a while here, a couple of times a year, we also have live sessions here, 5-day live sessions, where members can come together and we can jump into some additional training and live trading at no additional cost to you, which is kind of an ongoing benefit of your initial cost. So again, please check it out. If you're not a member, I highly encourage you to jump on board. All right, let's go ahead and get started with our monthly market outlook here. I'm going to bring over my main chart setup here, and I'm going to start with some futures here, as I usually do. Usually I start with the S&P 500, so the E-mini S&P 500 in this case, and discuss what the upcoming moves may be, not only for the month but typically for the next couple of months, trying to figure out which way this thing may go. We've been pretty solid in our analysis here for quite a while in terms of, you know, where we thought price was going. We had some great market structure that really helped us along the way, and it really helped reveal where some of these targets could be. We have we've bounced off of those levels almost flawlessly. You know, first breaking through, say, 4,200 to reach our 4,600 target, bouncing off of 4,600 on a rejection day here, and returning back to 4,200, and then seeing 4,200 become 46, and then 5,000. That was right in line with what we were looking for. In Q4 of last year, as we were heading into Q4, we were looking for a check mark Q4, which means early weakness to begin Q4, and then we were looking for a buy the dip and a rally into the end of the year. This check mark continuation type of move here was probably one of the best we'd seen, though, or at least one of the best I had seen to finish a year. That was a tremendous check mark continuation. And then from that move, we had a very, very bullish Q1. Unidirectional trending movement took us through the 5,000 level, which then opened up our next upside target of 5,400. We've come just shy of reaching 5,400. We haven't quite gotten there. Within 30, 35 points of reaching that level, which is, you know, good enough, I suppose, but usually we like our levels to be hit. So after multiple months of trending price action like this, I mean, again, this is a October low, and then this is a March high, or I guess an April 1st high. You get that much unidirectional trending price action, there's one of two things that tends to happen. You're either going to get a deep pullback, or you're going to get a pullback and a rest phase where this market then looks to kind of digest that recent movement. And so we were looking initially at the beginning of Q2 here for a rejection here and a return to this pink line right there. That pink line is the previous quarter's midpoint. That's the previous quarter's high and close. And whenever you reject it after a massive elongated previous quarter, you tend to see a return back to the midpoint of that quarter. In the worst case scenario, you would see a breach of that mid, and then you open up the previous low down below. So in this case, it held the mid and bounced. Now this bounce, I was still thinking that we might see another leg of weakness on a lower high potential. But what happened here was May 1st. May 1st, we had our FOMC meeting that occurred. We got our rate decision, the statement, and then the press conference. We had a massive intraday rally and failure, and it looked like things were about to really break down on the second trading day of May, and instead it went the opposite way. Instead, it was a massive rally through the tail event. That's a huge failure of the previous day's tail, and then that led to a breach of the previous month's midpoint. So this was all again in May, which just finished up last week. That break right there was an indication that we were likely going to go and retest the high of the year and likely set a new high somewhere in the 53.60 zone. And we got that move. We hit a high of 53.68. And now, once that happened, and as this move was playing out, now for those of you in Swing Trade Pro, you know the trade sequence here, how this bullish trade sequence played out. And one of the things we talk about in Swing Trade Pro is to watch for failed new lows in an uptrending market. In a downtrending market, one of the things we talk about is failed new highs, failed new highs, failed new highs, and then look to trap and reverse. So it's played out perfectly in line with a Swing Trade Pro 2.0 blueprint approach. Now this changed things right there, and this is what we were looking for initially. As price was approaching this blue line, as it was approaching a new high above, the April high here, we were looking for some sort of rejection day, a huge high range rejection. We got it right here. That was a huge 200+% of ADR day. If you look down here, that's that day's range, which was nearly 100 points of range. It was like 94 points of range, and that's a significant range right there. Whenever you have that and your average is way down here and it's 240, 260% of ADR, that can be looked at as a day one rejection. So I marked it as a day one rejection with a downward bias, and we were dropping pretty good until the very last 20 or 30 minutes of the month, which was Friday. We had a huge turnaround and rally to end the month. That was a really weird rally right at the end of May. And so now what we have are two strong pivot extremes. We have this bearish rejection, we have that bullish rejection right there. And so now you have this large range that is developed here, or is developing, and we could be looking at further price action within that range. I would say right now, if we continue to see kind of a failure at these highs here, we could be looking at a rotation back within the range. So this is what we were looking for initially, is for this larger kind of trading range to develop here, where you have this move up, this move down, that move up, and then ultimately do we get a move back down, perhaps toward 49.50. 49.50 could be the target down below, and this price action right now could be a buildup of energy before we see a breach and continuation. The breach would occur at 5,200. 5,200 and Friday's low. That's where a big break would occur. Now, I guess the big question is, when does that occur? Do we see more trading range action first? Do we have to get kind of a higher high rejection again? How is that going to play out? And again, that it's hard to tell right away. But I would say for tomorrow, if you're just looking one day out and you're looking for how this thing's going to play out tomorrow, we have 2-day highs that are very close to each other right here. The idea tomorrow would be watching for a failed new high, which means price would push above 2-day highs and a rejection would occur, which would bring you back into the range. So we could be looking at a move that takes us back toward 52.60 tomorrow, and that could continue to keep price kind of at the center of this range. So tomorrow could be a fade event back down. If we come in here tomorrow and we have some strong breakout move, maybe there's a stop run day that takes us up, and now you're looking at a higher high failure up here. But as of right now, this still looks very much like a range that could see a rotation back toward these lows. And if so, that would provide an opportunity to fade it back up. So again, if we see 49.50, or if you see 49.50 down the road, that could provide a very good swing opportunity to bring it back up the range up ahead. So those are some thoughts right now for the ES. If you look at the weekly chart here, again, we're sitting at these highs. It's been a tremendous elongated move, like I said. So to just break out and continue to extend that move, you just don't see that very often. I mean, like I usually say, anything can happen in the market, but to see this thing break out and just extend would be an outlier type of event. So I would say, again, there is the potential to see another deep pullback here toward the 49.50 zone. If we get a 49.50 test, that could provide a bounce opportunity back up yet again. So those are some thoughts on the ES right here, as this market has been quite bullish here lately, but it currently inside range for the week, inside day for the day. building some energy. Keep an eye on 2-day highs tomorrow for a potential fade back down the range. If we look at the YM has pretty much executed. Thanks, George, for that question. We'll get to NVIDIA here as we get to the stocks. Yeah, that's going to be a good one to watch. If we look at the YM, this one's pretty much executed that move already. And you can see up here, very narrow range. Didn't quite get a new high, but did get kind of in this little area right here. A very solid rally, and then in a matter of a week, gave it all back. One of the things we tend to look for here when we get a new FOMC key level. By the way, we get another Fed meeting next week. So next week we get another 2-day FOMC meeting, and on Wednesday we'll get our Fed statement, rate decision, press conference, and volatility. So we're going to get ourselves another FOMC key level. If you notice right here, I have these lines that come out this way. I got the March meeting here that comes out this way, and here's the January 31st meeting right here. That, if you want to play along at home, those are the 1 o'clock open price. So it's basically the open price right at 1 o'clock when the statement and the rate decision are released. And that price right there has a memory. It's a very important price. This is the one from December. This is the one from January. This is the one from March right here. And this is the one from May. So those are important levels. One of the things I usually say is if that level is taken immediately bid, then it's going to go up, 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 up until it can't go up anymore. And once you see rejection, it tends to snap back to that level. And this one played out perfectly. The ES and the NQs still have time to go get that level. So that's what we're looking for, is perhaps a snapback to that level. This one came within 1 point the other day. Thursday, it hit 38,111. Can you imagine? 38,111. It got within 1 point, developed a squat bar, and then turned around on Friday's strength. Surprise strength, by the way. I didn't think it was going to rally like that on Friday. We were looking for a modest outside day down to complete the move. So if you look at this now, this is kind of what we're talking about with the ES. Developing kind of a larger trading range here where you have this move, this move, this move, and now that move down, and we almost have it back toward 37,800. And it's kind of stuck in the middle zone right now. Back to 38.8 we are. So this one's already kind of executed its move a little bit. It's back to a flat VWAP for the year. Inside day today, which is what we were looking for yesterday afternoon. Yesterday afternoon, in our afternoon session, we were looking for today to be inside day. And you know, again, we'll be keeping an eye on 2-day highs tomorrow. Could fade back in and stay within the range for the most part as we head into NFP Friday. Non-farm payroll comes out Friday morning. So with this one, 38.8 is very important here as a kind of a near-term market structure level. You can see resistance, a break, a transition, and it's kind of building up right there at that moment. It still appears as though we may be on the downswing here, which takes us to 37.8 as the next kind of near-term target down, as it trades kind of in this lower distribution. Again, as I said, anything can happen, so if we start with a stop run day of some sort, then perhaps we're headed back up within the range. But this is a very mature range right here that's developed as well. The weekly chart of this this market continues to show a bullish overall trajectory, still holding at the highs. But a lot of times what you're looking for here is to fade the edges. Fade the edges. So here's an edge, it faded back down, edge, faded back up, edge, faded back down. Right now we're not quite at an edge. So that's why we may need to go find the edge. Go get a low and then snap back up. Or the other way around, come find a high and then snap back into the range. Still with an upward bias. And since this market still has an upward bias, the best spots to do business are at the lower edge after selling pressure. Kind of like over here, you know, kind of meandering up, and then when it came down right here, that was a perfect trap. And then you see the V kind of check mark day or check mark quarter that developed there. Down first, a V bottom, and then a massive rally. So that could play out yet again up ahead. So this one may need a little bit more time to go find an edge, something to keep an eye on. Now, if we look at the NQ, oh, and great question here. Sorry, I missed that question, Mateo. What are those red and green areas? So that is basically my PivotBoss pivots identify the previous high, a previous low, and the midpoint. I also include the pivot range with it. And then up to this point right there, that's the 25% extension. Down here is the 25% extension. And then I also have the 50, 75, and 100% extensions. That's how I write up my PivotBoss pivots. So it's using previous range, the previous high, low, close, right? That information. And so this is 25% extension from the previous high based off of the prior range. And what tends to happen is when you get into that area between the previous high and the 25%, it can tend to be a fade zone back down. When you get into the zone between the previous low and the 25%, it can be a fade area back up. So they're color coded in that way. And that's basically you know, the pivots from a monthly. Those are monthly pivots, but you can also do this on a quarterly perspective. You can also do this on an intraday, day-to-day perspective, or weekly pivots as well, rolling pivots, whatever you want. But one of the best ways that I tend to approach the market here is if, say, we're trending up, and then you have a strong high, strong low here, and you're trending up, then you want to trap below that low. It comes down here, you trap, and you reverse. So yeah, this could be a tremendous area right here up ahead. So yeah, thank you for the question there. Those are the intraday charts, so you can kind of see the intraday red and green zones. This actually has the Camarilla pivots on it with those levels. Let me see here. Let me bring this over the 60-minute time frame. So right now the 60-minute time frame would show the previous week's high, previous week's low, and then the spot down to the S25 would be color coded, etc. Which means, again, you know, if we come up into this area, it could be a fade back down. We come into this area, it's a fade back up. All right, so let's grab this again here. So for the NQ, right now, it's very similar to the ES in that it doesn't quite look like the YM, where the YM has already reversed course back into the range, kind of as we were anticipating. This one has created kind of a strong high, strong low, just like the ES, and so that could set the boundaries for a little bit more range-bound action here. We'll see how long that lasts, but this could still be a range that builds energy for maybe a fade back down. One of the things I was looking for initially was a return back to the FOMC key level below, again from the May time frame. So May 1st, these things rallied from that level. We found a strong high. The tendency would then be to reverse course and come back to that level at some point. And you'll see, you know, here's the March meeting, for example. We went bid initially, found a quick rejection, and came back to it. And then it chopped around that level and then took it offered, and then it came back to that level. And that's just kind of how it plays out. It's incredible how these FOMC key levels have that memory and how the market trades off those levels, because the Fed, very important to what the market does here. There you go. So now looking at this chart here, the thing to keep in mind for tomorrow, for those of you who are intraday traders, 2-day highs. 2-day highs, very, very important. Keep an eye on those 2-day highs. If we come into the 2-day highs here, maybe we hit 18.8, it could be an opportunity to trap and reverse back into the range. Maybe it becomes an outside day down briefly, but 2-day high is going to be very important for a potential fade opportunity tomorrow as an intraday opportunity. So it comes above those highs, look for a box or a rejection, and we could be fading it back down into the range back toward today's low. So that's an opportunity from a short-term intraday perspective. But again, this market has been quite bullish. We do have a higher high that's developed, and if you look at this on kind of a weekly chart with an oscillator, you have a bearish divergence that's developed there. That could usually bring you back to the prior pivot low. So in the worst case scenario here, we're back between 17K and 17.2, and that could provide a tremendous buying opportunity back up the range. So some thoughts there for the NQ. Now, RTY, this is the Russell 2000. You know, these markets can tend to have different leadership qualities here. Sometimes tech leading higher, sometimes it's blue chip leading higher, or vice versa, leading lower. Sometimes it's the small cap, Russell 2000. One of the things with this one here, it was one of the ones that lagged the most on the recent rally. It was not able to hit a new high. It wasn't even able to go back to break even for the quarter. After this intense sell-off here, it had a decent little rally, but since then has formed this rounded behavior, or perhaps head and shoulder pattern here. We called out the head and shoulder a little bit early last week on this high right here, got a new low, and then it came back and got a new high again yesterday. So again, continuing to tap that top of that right shoulder. The top of the right shoulder tends to be the best spot to defend as a bear, and we've seen a pretty nice drop already. It's sitting right on top of a couple of key levels. Year-to-date VWAP, which is 2032, and the previous quarter's midpoint, which is the pink line right here. That's the previous quarter's mid, and this is year-to-date VWAP. Those are two significant levels. You break here and you open up the previous low. 1960 could be ahead for this one. Not only 1960, but maybe a little bit lower into 1915. Now, one level that we've had on our board for a long time is 1970, which seems very, very precise because it is, but I call it 1920 just to be a nice round number. You can see when it exploded through it here, it became support here, kind of bounced near it there, and bounced off of it here recently. So if we're going to fail here, 1920 might be the next target again down below. And you might ask how I got that level. That level is derived from a key range that I drew up a long time ago. I mean, this is back in 2022 now, which is just crazy how this key range has continued to be in play. But that key range high is 1970. You can see it across the highs. The low of the key range is back here at 1640.8, and then the midpoint of that key range is right here, and it's about 1780. And again, when we have a great key range, we can fade the edges. We have great targets and great movement off those key ranges. As a matter of fact, in Q4 of last year, when price was right there, stuck in this little range, we mentioned that this one might have the best rally to end the year because it has some catch-up to play. And I had a year-end target at 1970. You can see it exploded through it to close at 2100 or thereabouts. So it tremendously rallied here. As of right now, we're kind of stuck in this zone at the moment. It looks like we're seeing some topping behavior, and if we fail at value and we fail at the midpoint of last quarter's range, we might have a return trip to 1970 that could be ahead. So that could mean some short-term weakness here down the road. So how fast we get there, we will see. With another Fed meeting coming up next week, it wouldn't be a surprise if these markets kind of find their range-bound action into next Wednesday, and then Wednesday we see all hell break loose. With a Wednesday, a late Wednesday move, a high range Thursday, a high range Friday. So that could be something to keep in mind, is next week could be a high range week. And that's why we scheduled our live sessions for Swing Trade Pro next Wednesday. The first session will be Wednesday at the close, and then we go into Friday, Thursday, Friday, and then again Monday and Tuesday. So a lot of volatility could be released late next week, and we'll be on top of it with our Swing Trade Pro folks and in the trading room as well. So this one may have some more downside to be ahead. Now I did want to cover some crypto markets as well. I'll get to Bitcoin and Ethereum here, but I'm going to start real quickly with crude oil, just to give some background here on crude. Quite a bit of selling pressure for crude here in the previous session. A huge move to the downside here, breaching the 76 level. For those of you that follow my pre-market analysis, you know, we had this expanding range that was developing here. And last week we were looking for price to rally. Well, price was already rallying on that Tuesday, but we were looking for it to finish into 80, and then we were looking for a failed new high to bring us back across the range, and it did it perfectly last week. Coming into this week, I was looking for a drop through the previous low and then for a rejection to occur, and then we could bring it back up in the range. But that clearly didn't happen yesterday. Crude oil had bad intentions yesterday and wanted a full-on downside break. It got it at 76. It finished at 74. This was a huge high-range day, $3.54, which is a massive range, unlike anything we've seen since the first week of the year, where we had some of these wild high-range days of $4 or very close to it. This one I don't really count. I mean, it was there, but that was a headline news item on a retaliation by Israel on Iran, and it was kind of a snowflake thing, and it just kind of withered back down. So that was kind of a wild one here, but that was news related. This is a massive transition day, and I call a transition day a day where you have a massive price discovery phase, and it's a high range day, and it transitions you from one market structure to another. And so you had been in this range for a whole month, and then this one said, okay, now we're transitioning out of this range into the lower market structure. So this is very bearish right now. We might be coming to a point where we get a bounce. And I'm going to switch this real quickly to our yearly pivots right here, because the yearly pivots bring up the previous year's high, low, and close and midpoint. For example, this right here is your previous year's midpoint. This is your previous year's close. Look how the close went bid multiple times. It hit off the mid. It came back to the close, went back to the mid. It broke the mid and saw some expansion upward until it couldn't go anymore, and then came back to the mid. It's failed at the mid now and is dropping. This is your next level down. That's the whole point. Your next key level down is 71.33. That's break even for the year. That's break even for the year. So it closed 2023 at 71.33. and we've clearly transitioned down and are working lower. Do we get that level tomorrow? Do we get it at some point this week? If so, it wouldn't be surprising if we start to see a bounce off that level. And if we get a bounce off that level, we could see a 50% bounce back up the range, back towards 76. You have the high here, which is around 80.5 or so. Let's see what that specific number is. It's 80.62. You go down to 71.33, and you're looking at a bounce back that takes you to the middle of that range, and that could become a new key range. And we talked about that in our room here this afternoon. Very similar to what happened back here. One of our members, Jay, pointed out this similar move where we sold off from up here, hit the level, and then bounced back to the midpoint here. Not only did it do that, but it went back to that high. So we could be looking at a responsive phase back up the range here in the days ahead. But we need a strong rejection. We need a strong low. We need to test a key level, because right now we're kind of dangling in midair. And I usually like my rejections not to dangle in midair. You know, you want to go test an edge, you want to go test a key pivot of some sort, and then react, throw off a nice rejection tail or some sort of reaction, and that can help boost price up the way. And so that's what we're looking for. Here's a continuation towards 71.33, and if we can get ourselves a strong low, you'd be looking for a 1 to 5 day rally back up toward the breakdown point of about 76. That's your next potential move up. And if we can get that move, we get ourselves a new key range, and now we have ourselves a whole new world here where we can work off of this new key range. But right now, very clear, as we've talked about many times in our trading room, that in an election year with an incumbent that's running for president, the tendency would be to try and keep gas prices low. We've seen the use of the SPR quite often to help keep prices low as well. So this thing's fighting an uphill battle, and that's why the path of least resistance is still down until proven otherwise. And that's what made this fade opportunity so easy last week to call, was that, you know, we just had a massive move up. We're closing above 80 for the first time in a while. We should be looking for that pink signal right there. And for those of you who don't know what that pink signal is, it's basically what I call a thrust reversal signal. And it's your earliest rejection signal that can develop, and it usually pushes price back within the previous range. It's a signal that I developed for our PivotBoss Masters members. You can go to pivotbossmasters.com to learn more about that. But a very strong signal there, and it worked like a charm. I mean, it worked actually textbook and perfect, and returned price precisely to the previous session's midpoint of 78.99, which was the exact low the very next day. So just a tremendous movement there, but path of least resistance is clearly down. But after this impulse move down here, if we can find ourselves a strong low like this, there could be a snapback to the middle of that range. You would take the high, the low, high plus low divided by 2 gives you the midpoint. That would be your target. So the target would be somewhere between 76 and 77. Keep an eye on that potential move up ahead for crude oil. Now, I did want to talk a little bit here regarding Bitcoin. We've nailed Bitcoin so perfectly here, going back 2 years now. Even before that, you know, on the way down, but focusing on the bullish point, you know, coming into 2023 for Bitcoin, we mentioned all we need to do is break above 18,000, and we'll get this pink line right here. That pink line was 31.7. And I said if we can get above 18K, we can work our way to 31.7 by the end of the year. Well, it got there in the first half of the year. So the first half of the year it got there, 18K to 31.7. And then we mentioned, okay, well, on the pullback here, this range right here, if we can bust through 30K, we can open up the previous high into the 47, 48 zone, which is right here. It ended up getting it in January. A tremendous move there. Now along the way there are a couple of buy opportunities off 25K that we mentioned. You know, if it pulls back to 25K, defend. Pulls back to 25K, defend. If it can break through 30, it finally opens the path higher, and we got that move. So great price action there. Now fast forward here, we needed price to hold the 40K level right there, and if it can hold 40K, it had a shot to bounce back toward 50. But right there is where we quantified that range as a 8 to 10,000 point breakout potential, and it went perfectly 10,000 points from the breakout point. It was a tremendous move, and then it gave us another compression here. We quantified that one at about the same, 8 to 10,000 points, and it did that and then some. You know, again, this is during the bullish phase here where they were pumping a ton of cash into the new spot Bitcoin ETFs. So great amount of price action there, and obviously it culminated with this high right here. That high is 74,415. 74,415, new all-time highs. That's a new all-time high. And then look what happened. Impulsive sell-off down, and then it bounced back to the midpoint of that range. And that's what I call a new key range. And from that key range, and I know I've mentioned this in other market outlooks, but you have this key range high, you have that key range low, you have this midpoint. Now for those of you who are familiar with my key ranges, you know where my favorite entry point is for a key range. It's the 25% extension right here. It's that level right there. It's this level right there. And it was 57 and change. I just called it 58K. We called 58K as the buy point basically right here. When price bounced there, it was about March 20th. We said the best entry point now will be 58K. And 2 months later, it hit 58K, and it also hit a rising year-to-date VWAP. That's this line right there. And bounced, and it has bounced now. It went 14,000 points over the next few weeks off that level. That's one of my favorites. If you don't know about key range analysis, I teach it quite a bit. It is tremendous. What I love about key range analysis is anybody can use it, no matter your platform. You don't need any fancy bells and whistles, no indicators. You just need eyeballs. And if you're trading, chances are you likely have eyeballs. I haven't seen a blind trader yet, but I mean, I'm sure they're out there. You have an impulsive move down that happens, a snapback to the midpoint that happens quickly, and that right there gives you a range that you can have confidence in. And any test below the key range low is an opportunity to trap and reverse. Trap and reverse, trap and reverse. So it's a powerful way to go about it. Love it. Now, if you're not part of our trading room, here, you have, obviously with our Swing Trade Pro offer here, you can get a free month of our trading room, or you can get 50% off if you go and subscribe at the off the website. I do have what's called a 10-part executive training series, and what that entails all different types of our analysis, and one of the lessons is key range analysis. So we have a ton of content at the trading room that's already there. Key range analysis is one of them. Good points there. Sometimes I think I trade blind. That's funny, Dwayne. So now, based off of this key range, 87,810 is the next upside target. Now, I have mentioned before that I think that that might be pretty easy to get once it gets going again. But from this impulse move right there, there's already enough juice to get you here. But now you have months of buildup, which might actually open up an even bigger move. But I'm just calling it 88K. That's your next upside target here. Recently, we had this compression in our pre-market video, which is the free morning video. That video right there mentioned that we likely have about a 10,000 point move coming to the upside. And I think it was the very next day we got that breakout move, and it went 11,000 points to the upside. Now we have another compression that's building out. Can this compression fuel the next breakout move ahead? This one's a little tougher now, because this one was easier because we were at the low end of the trading range. When you're at the low end of the trading range, you can break and rally to the top. When you're at the top of the range, sometimes this compression can release back to the bottom. Are we going to get a retest of 58 to 60K? Or can this range right here spark the next breakout move ahead? I'm very bullish Bitcoin here lately. I've been bullish since our 18K idea. Timing is what is the challenge here. When will it break and go? And it's hard to tell when. I'm seeming to tie it here to Ethereum. We'll look at Ethereum here in a moment. But if ETH gets a spot ETF or 2 or 5, like is predicted, then we could have that follow through to the upside. Ethereum rallied alongside Bitcoin here on its ETF movement, and again, it could be a very similar approach up ahead. So, you know, we could be looking at a very similar continuation when ETH gets its approval for spot ETFs. I'm hopeful that happens. I know there's been a lot of rumor mill stuff going on. It seems like it's getting closer. You don't want to count chickens before they're hatched, obviously, but like I mentioned to the group before, you don't just get a futures contract in your name and not likely get an ETF at some point. They've already legitimized ETH and Bitcoin in that way, and then having these ETFs further legitimizes it in my view. So very, very powerful stuff to have that process. So right here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, maybe 12, 13, you know, however you want to go about that. Let's just make it 10. I'll use my trusty ADR indicator here, and what this will do is quantify that compression for us. And you can see down here, when it's very compressed, you get this magenta colored bar, very easy color coded bar. And that means it's less than 65% of average. Right now you can see it's right at 59.6% of average. That's the total amount of points in that range. Average would be 9,500 points. That's what average would be, 9,500 points. So we could see a 9,500 point move and just be an average move based on a 2-week range, right, 10-day range. But if it's compressed, you tend to want to see it go beyond average, and that's where this upper red dot comes into view right here. That upper red dot is 125% of average, and you can see it's closing in on 12K, 11.9. Let's just call it 12,000 points. So a 12,000 point breakout move could be ahead. Could be ahead. Even if it's somewhere between 10 and 12,000, that's still a decent breakout opportunity. We're still building energy in this range, but man, it's getting close. It's getting close to a 10 to 12,000 point breakout move. Very similar to what we talked about here, and we got it. Very similar to what we talked about here and here. We got both of those instances. Can we get another one here soon? So that's going to be something to keep an eye on with Bitcoin. If you look at ETH, which is right here, ETH, look at the compression here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. It's quantified down here. So a 10-day buildup of energy. By the way, likewise, we had this as a compression here, and we got a massive breakout move. Again, this is on news, or it was kind of news and rumors put together. But I believe, AP picked it up and actual news items that there could be a spot ETF approval. So you get this big bump to the upside. This is the holding pattern and the buildup of energy before that event occurs. You'd like to see it happen sooner than later. I heard as early as April, then I heard in May, and here we are in June, and it has yet to happen. But look at the rally that this one had alongside Bitcoin. That's tremendous right there, and it could only be the beginning. We could be looking at a move. Again, if this is a move that takes us somewhere between 1,000 and 1,200 points. Look at this right here. That's a 1,000-point average. This is a 1,200 point 125. So you're looking for somewhere between 1,000 and 1,200 points of movement up ahead. What I've mentioned to our group here is if we get one pullback, there could be an opportunity to see a buy the dip opportunity for a continuation to the upside. So if we get one shakeout move and say it hits 3,500 plus 1,000 and you're at 4,500, plus 2,000 and you're at 4,700, and that takes you right to this extension. So the next move could be significant, but again, timing is always the deal here. We could see further compression before that happens, and if you do see further compression, say we see 12 days, 13, 15 days of compression, these numbers only grow because you're adding days to it. So instead of 1,000 to 1,200 points, it could become 1,200 to 1,500 points of movement. So just some thoughts right there on that one. One last thing I'll say about ETH here is we have this key range. So like Bitcoin, this one also developed this impulse sell-off and found a strong low here, and then here's your midpoint. And so again, back in mid March, when price was here at around 3,600, I mentioned the best entry on the board would be about 2,800. 2,800 would be the best entry on the board because it's the 25% extension of the key range, and that's where the best ambushes or traps occur. And look how close it got right there. I think that low was about 25 points off. Let's see. Yep, the low was 28.25 and a half. So, I mean, wow, the precision there to find a zone that could be a great entry opportunity. And from that zone, we've seen this thing rally to nearly 4,000. It got super close to 4,000. So what a move here off of this key range. Now, the key range forecasts a 100% target to 5,200. 5,200 is the key range target from that key range. And I know those of you that have been with me for a while know how incredible these key ranges are. At some point or another, it goes and gets that 100% target more often than not. More often than not. And so again, to see a trap below the key range low on multiple weeks here, and then to see the move across the range, I would say the next move may not take us precisely to 52 right away, but that's where we're working toward. Perhaps in the back half of this year. So nice compression here. Maybe we can get a check mark month that plays out. Can we get one pullback maybe to 3,500 or 3,550, and that could provide a bounce opportunity to 43, 4,400 up ahead. That could be a great month. Yeah. So looking for this thing to work its way higher toward that 5,200 print. And that's, again, something we talked about in March. And I even mentioned that we probably get toward 2,800, but man, if we can just touch 2,600, that would be a double to that target. But I didn't think we'd likely get 26, and we didn't. I mean, we almost got 28. So 5,200 could be the next target based off this key range. And just from a near-term perspective, got a great 2-week compression. Man, can we get a failed new low and go? That could provide a great breakout opportunity up ahead for this one. So that pretty much does it for the futures section here. We'll jump onto some stocks. And I see here JA asking about ETC as an alternative to this as a buy candidate. Let's look at ETC here. Is this chart right here, or are you talking about the actual like crypto? Yeah, I have it on my other machine here. You're talking about the ETC crypto? Because I'm not getting it here on this one here. But I am seeing something on my Coinbase, and I see ETC USD. Yeah. And that's on a different machine right now. This has a similar key range as well, with about a $13 key range spread, which means 53 could be the upside target up ahead. Right now it's trading 29.52. So yeah, you have a similar key range which hits about 40, then pulls back to about 27. That's 13 points. You see a similar trap below at around 22, 23. So 53 could be the upside target for this one based off that key range. Oh yeah, let's look at GC. Let's look at that one. I had it on my list here and skipped over that one. I guess I went straight to crude. That's what happened. And then we'll jump into some stocks. Thank you for that. Now, with this one I mentioned I'm struggling a little bit here lately. Obviously, the breakout move has been tremendous. We had it as a buy candidate off the 2,000 level. And then off of this move, or that compression right there, we had it rallying about 100 and something points. I forgot exactly how many now. I could probably quantify that, which was going to take it to a new high. I think somewhere near 2,200 or around 2,200. But I didn't know if I believed it too much because we had this massive rejection here, and we just hadn't seen much price action below 2,100, let alone 2,200. But man, did it fly. It did it in spades. Held the pullback, rallied again, put in another strong high here. So this is incredible. This is incredible strength here. You look at the weekly chart, and you can just see that the trading range that we've been working off of for 4 years was finally broken. This is the trading range that we've been working off of. It was about 1680 to about 2080, with a midline at about 1880, and it was so well behaved at the extremes. At the extremes, you can just see, you could count on these lines time and time again. There was a trap here and a triple bottom that led to a great rally. The midline was a great reversal target. So that trading range was impressive. And then we formed that day and that week right there. And that's where I thought for sure we were headed back to 1880. And then in the trading room, one thing I mentioned at the time was, if we are going to break to the upside, The only way I see it happening is if this major rejection day doesn't lead to selling pressure. Instead, it becomes a key range. And it did. Off of that high, that low, and that midpoint. Because that's going to be a wide enough key range to build energy for a while. And then once the release of energy occurs, it's going to happen right at the edge. And that's going to trigger the expansion phase. That was my caveat back then. I didn't think it was going to happen, but it did. So going back over here, you know, that was a massive rejection, so I thought for sure we're headed back toward the middle of the range at about 1880. And instead we got this follow-up day right there, which slung things back to the midpoint. And once we got that mid, we said, okay, well now it's a trading range. Now we're building energy between that high and this low and that midpoint, and it did. It was a trading range that built out, and then ultimately that trading range released to the upside and triggered this phase of expansion. So just remember that next time you have a massive 4-year trading range that is super huge. That's a way that you can force expansion. Now that we've seen that expansion, again, we can go back to the weekly chart on the 10-year view. We easily got the 100% target. We nearly got the 200% target. And we're up here at these highs, and it looks like a new trading range is developing. It has developed. I don't really see a massive correction happening. Instead, I actually had 2480 as the next upside target because this was a 200-point range, right? 2080, sorry, a 400-point range, 1680 to 2080, and that was 4 years inside that range. So now if you take 2080 here and add 400 to it, you get 2480. So is this the next 2-year trading range here? Or do we see further expansion from there? So it's hard to call right now exactly. I know we're stuck in a trading range at the moment. Sometimes what happens is you can bisect a range. So if this is 2480 here, that's 2080 here, 2280 is there. So then you trade in this upper 200 points, and then at some point you may transition and trade in these lower 200 points and then rally back up, and now you're in this giant 400-point trading range. So that could be kind of how this thing plays out a little bit. It's tough to call it here. I would say based on the daily chart right now, we're still stuck in this trading range right here. We're stuck at the center of a perfect D-shaped profile. Look at that right there. Look how perfect that D-shaped profile is right there. That's perfect. Let me draw it out again right there. And we're right at the center of the range, right in this little box. So I mentioned last week in here that this could be a tough spot for gold here because you get stuck at the center of the range, right? HVNs, you bounce a rubber ball into mud, it gets stuck. And that's what an HVN is because it's happily facilitating trade there. You bounce a rubber ball onto concrete, that's an LVN, and you get a big bounce. You get a big bounce, right? And so right now it's stuck in the mud. It's stuck in the mud. We could see an update tomorrow back up the range and just continue to do this. At some point, we hit the edge of the D shape. Will it come down to 2280? If so, that's probably a great fade back up the trading range. If it comes back up to 2460 or so, it's probably a great fade back in the range. So I would say right now, you just kind of have to create a micro profile, right? A micro volume profile here and just trade this D shape and this range from the beginning of April this way. And if you're stuck at the center, you kind of avoid the chop. If it trades to an extreme, you fade it back to value. If it trades to an extreme, you fade it back to value. And so that's kind of as good as I got right now for gold. You do see that we have almost the full 400-point move. This was 2480, and that was where I was forecasting the upper edge to go. And on this move, I was actually saying, okay, we might go get it now. And it fell just shy. So it didn't quite get there. But 2080 to 2480 is the next 400-point move. And that could become a large trading range where this thing builds new market structure for the next while. Yeah, the next good while. So right now, just from a near-term perspective, you would love to see something fall and then snap back, or maybe rally and snap back, and that's kind of the play right now for gold. Platinum. And then we'll jump into some stocks. I know I keep saying that, but thank you for the requests here. Platinum. Impressive movement out of platinum. For those of you in our room, you know I was looking for this thing to rally toward 1135 to 1140. We have this great key range in platinum that developed. Impulse sell-off back to the midpoint. It broke through the top of the key range. It reached the 50% extension within 2 days, but fell shy of the 100% target. And that's not something that tends to happen, but it certainly can. It happened in crude oil where it fell just shy of its 91.5 target. This 1140 up here is basically the top end of a large trading range that has developed for a good long while. So this is your weekly chart right here. I call it 1140. I guess you can say 1150 here, but that, you know, the top of the range here on multiple trips, the bottom of the range, and maybe 850. That's 1150. That's 850, and this is 1,000. So if you wanted to look at the market structure, that's what it adds up to. Usually, you know, you see right here, this was a great rounded bottom saucer pattern, and it develops in the lower distribution of this larger range, and the upper distribution is here. So when you transition like this and explode into the upper distribution, the first pullback to retest the transition point can tend to be a defense point for a continuation to the edge. So maybe we still go, but clearly this is a massive pullback right now. So 1,000 is kind of the middle extreme here to keep an eye on. If you start failing at 1,000 too much, maybe it falls back into the lower distribution. There's been a lot of energy on the way up here. Metals had been very strong, but they've been putting in some big time new highs. Silver at new highs, not seen in like a decade. Copper, new highs not seen in like a decade. Platinum here had its rally. Gold obviously has had its rally to new all-time highs. So you wonder if there's another phase coming. But 1150, the top end of the range, 850 the bottom, and 1,000 is the middle zone here. So, you know, this one has been a little tough here lately because it got really aggressive and is starting to falter and fail a bit here. It's going to take some juice to find a strong low and maybe turn it back up. As of right now, to fail at the key range high, you would normally point to the key range midpoint at 963, at least in the very short term. So that top end of the key range right there, about 1020, very important. It took it out. And when you take out that range, you start to point to 963. So those are some near-term thoughts here for platinum. Let's get to some stocks here. I know the first one here, I'll start with some of the ones I had ready to go, and then we'll jump into some of the ones that you're asking about as well. So I know the NVIDIA's on here. We also have Meta as well. I want to start with Tesla for a moment. Tesla put in a strong low. We had this one as a bear case scenario. into about 160. We were looking for this thing to get to 160 and said, don't even look at it until it gets to 160. And once it gets to 160, we'll see what happens. And then it failed through 160 and got a low of 138.80. And then earnings comes out, and it gapped up 15 points. And if you recall, in the trading room, I was actually looking for this to gap down 15 points. I was short with some options there. And again, they missed across the board, but had a very fluffy earnings call with Elon. And then you had some news out of China and a potential partnership there on their full self-driving, and that gave it another pop. But that was kind of fluffery. And what that fluffery created was a beautiful impulse rally. And once we got the second day here of that rally, I mentioned we likely get a snap back to the middle of that move. So we were looking for a return to 169, and it got there. 168.84 to be exact. And that gave us a new key range. That's what I call a key range fade as well. When you have the impulse move that's been defined, but you haven't reached the midpoint yet, you can fade price back to that midpoint. And that's a perfectly doable trade. I love that trade. It's a great one. But since then, we've gone sideways. It's been a lot of trouble here for this one here lately. I did test the full self-driving for a month when they gave it out for free, and I have a Tesla, and I loved it. It wasn't full self-driving where you can go to sleep, but it was pretty good. It was pretty good. I'm not going to lie. I kind of missed it a little bit, but, you know, I don't drive a whole lot, so I didn't really need it or anything. But I did have to intervene, you know, often enough where I'm kind of confused, like, why would it do that? Or it's kind of confused. But it was pretty good overall. Good enough. What I would say here about this key range is that key range gives us extensions now. And from a bullish perspective, again, you know, these markets tend to go up at times, tend to go down at times. So that's why I have extensions on both the top and bottom. The bottom extension would take you as low as $78, $78.74. The upper 100% extension takes you to $258.94. So call it 260, call it 80. Are we going to 260 first, or are we going to 80? Where are we going? So what I love about these key ranges, it gives you actionable areas to watch. And if we believe that there could be a little bit of a relief rally or some sort of, you know, he pulls a rabbit out of the hat, maybe in August over here, robo-taxis are a big deal, or whatever he's talking about. You have another earnings coming up in late July. What's going to happen here? Maybe 260 is doable down the road. If that's the case, using the key range, this would be the optimal entry, right? Just like we demonstrated on Bitcoin, we demonstrated that on Ethereum. Maybe if price can drop into that level, that could ultimately be a low, and you can rally to the upper 100% target over time. If you did that, 123 doubles to 246. Is my math right? 246. And that would basically bring you back to break even for the year. You don't even have to go to 260 to double it. Maybe if you want 260, you know, you can front run and go 130. But for this market, I would say again, be patient. And if you're patient enough, you might actually get it at a really good price here, where this compression right now might unwind to the downside. I mean, we're still in a kind of a downward channel here. Unwind to the downside, 124, 125, 130 could be a great opportunity, and there could actually be a potential double in this market back up the range down the way. That double might take the rest of the year, if at all, but that's a great way to potentially engage this opportunity. Remember, when I talk about a potential double, it's what I call the free trade idea. It's a free trade idea where you come into, say, 125. Say you buy 100 shares at 125, and when it gets to 250 and you've doubled it, you sell half. And what you've done there is now taken out your initial investment, and the last half of the trade is now a free trade that you've just taken out of the market, right? It's house money. And now you can have a free and clear 50 shares or whatever amount you decide to buy. Even if it went to $0, even if the stock price went to 0, you would lose nothing because you've taken out the first half of that trade. So that's how you would work a free trade idea. So that's just some thoughts right here on Tesla. Be patient. Maybe we can get a 125 entry. Maybe this thing can double going back to break even on the year. We'll see if that can play out. Apple, man, Apple looks a little ominous right now. It has a great trading range that's developed here over the last year of trading, maybe now 13 months. 165 has been the bottom of the trading range. 200 is the top of the trading range, and the middle is like, you know, 182, right? 182 half, somewhere in there. That's your trading range right now for Apple. Apple, look at this right here, key range. That's the key range. So right here, which is basically the first week of February, that key range solidified. Actually, it was the last day of trading in January. Here, instead of guessing, let's look. Yeah, January 30th. On January 30th, we gave a projection target of 164. Why? Because 164 is the 100% target. 164.22. If price were to break 180, it was going to open it up to the downside. And then we had the bottom of the trading range at 165. So I had 165 as a key level. So I said, don't even look at this thing until it gets to 165. And look, that became the low so far. And from that low, this thing has rallied 30 points from 164, and is currently close today's trading at 194. Today's high, 195.32. Impressive. And again, this is key range analysis. I'm not doing anything fancy here other than identifying the impulse move, setting my tool there to identify where the targets are. And because this key range developed at the top of this trading range, we were focused on the downswing back within the range. And a great rally has developed here since then. But we're coming to the end of the road. You know, today it hit 195. 200 would be a new all-time high. Stock split adjusted, obviously. So we might be down to our last 5 points here of runway. And once we get into this zone here, do we see another return back to the center of the range, 180s? And then maybe even across the range again. That's the nature of a trading range. You fade the extremes until proven otherwise. Again, this range is so wide that you wouldn't normally just, after rallying from the bottom, rallying in an impressive fashion, you wouldn't normally just break through and continue the rally. It's just not how markets operate. But like gold, what if it created a new key range up here and built energy? Then you might see an upside break develop at some point down the range, down the way. So maybe a key range up here, kind of like along the lines of what gold did, could provide that opportunity. But as of right now, I'm thinking we got 5 more points before this thing fades back down. This could be a sell 200 and return it back to about 182.50, which is kind of that center of that range. That could be the next path forward. Look up here, it got to 199.62, and within weeks it was at 182, 180. Over here, it got to 198, and within weeks, it was already at 180. It can happen fast because people see this up here, whales see it, institutions see it, and they want to ring the register and do it at the best price. So this one might have a fade opportunity coming up back toward 180 up ahead. Microsoft, here's Microsoft. Microsoft has a new key range, so I wanted to talk about this one. So brand new key range. Here's your impulse low. Rally, 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 rally until it found a strong high, and then it snapped back to the midpoint of that range right here. That's your new key range. It encompasses the recent trading range as well, so you have kind of, you know, this trading range that is developed here. This range is so wide right now that we might see more kind of choppy price action. But why I wanted to discuss this range is because ultimately it gives us some targets here to work with. The upside target of which would be 478. Are we working toward 478? And if we are working toward 478 down the road, then right here would be your best trap opportunity. Below 390 and into 378. Can it drop into 378, 380? That could provide a trap, and then we could be looking at an upside continuation that ultimately takes us to 480. You also have a rising 200-day moving average here. We haven't tested that in a long while, so if we come back to value from that perspective, there could be a defense there as well. So a new key range for Microsoft projecting $478.04. Could be a little bit of chop in here, but if we can get a drop that takes us back to this area here, that could provide a great trap and reverse. Even if it's just a trap and reverse across the range, but then maybe there's a continuation again that takes you to the 100% target up ahead. Wanted to talk a little bit of Coinbase. Now, those of you that have been around our room for a while know our kind of projection for Coinbase. We had it as a target off 80 to buy it and a potential double, and it went from 40 as a potential double, and it went from 40 to 80 in 5 weeks. It doubled in 5 weeks. And then we had it as a trap opportunity off the 50-55 zone, looking for it to go to about 115, and it doubled off of that area. Tremendous. And then off the pullback here, we were looking for a potential double again, but it needed to break through the 115 zone. And because we had a bullish outlook for Q4, we thought that could happen, and it exploded. Big time rounded bottom there. Great time watching this thing rally the way it did. Now heading into the beginning of the year, we were up here around 180. And I mentioned, man, if this thing can pull back to 115, that would provide the next double to 230. And lo and behold, it rallies to 230 and doubles alongside the Bitcoin rally. So that's been the projection here, multiple times to double, and man, did it ever play out in perfect fashion. So it's done exactly as we would have wanted and expected. And if you look at the weekly chart here, you can kind of see the progression here of how this thing is played out. You'll see the rounded bottom here. And here's the breakout through the top of the rounded bottom. There's 115, there's 115, there's the breakout at 115, there's the defense of 115, and a great move. The next level up would take us to about 360. 360. And that's basically that pivot high right there. That pivot high is 367, 368. You have the lower boundary of this range here, which is about 220, and we're trying to fight into this zone. So to recover this area would open up a continuation that can take us that high. So maybe it can get all the way back up that range. Now, just from a near-term perspective, we have a new key range as well. I guess it's not super new, but I mean it's from April. That key range high, that key range low, a midpoint right here, and here's some traps on the lower end of the range. Didn't quite get to the 25% extension, but it got close. So that's the key range to watch out for and engage. Ultimately, that key range forecasts a target at 323. So 323 could be the next major target for Coinbase, and I would say that when we reach that target would likely coincide with ETH getting a new ETF or 2 or 5. If ETH gets that approval, you'll likely see Bitcoin and ETH rally. You may see other altcoins rally, and that's when Coinbase does its best. So 323 is the likely next upside target for this one. And as always, when you have a great key range low here, anytime you get below that key range low, it's an opportunity to trap. Trap and reverse. Bear trap and reverse. So if we drop into this zone, even if it's down here in the 190 zone this month or next month, it could still be a trap and reverse for the best case scenario. So some thoughts there on Coinbase. Another one that's in the crypto space is Riot Blockchain. I guess Riot Platforms now. This one hadn't performed as well as some of the others, but it did quite well early in the year. You know, rallying from these lows, nearly doubling at these highs. In here, though, we thought it might see some weakness, and it got crushed all the way back down, hitting a low of $7.81. $7.81. That was a pretty solid low. You know, if you look at $9 here, if I bring $9 across these lows, it's a pretty firm area of support. We actually had it here as a double candidate last year with the rounded bottom, and it went precisely to 18. So it doubled in Q4 off the rounded bottom. Great opportunity there. This time around, look at this impulse move from 781 up to 1266. Tremendous rally and a pullback to the mid. Another key range. This one kind of looks like Tesla a little bit, right? A surprising rally of significant magnitude, and then it's been just compressing here ever since. So with this one, you know what I'm going to say already. If we get that pullback, watch for a pullback here, and if it can get somewhere between 781 and 659, that could provide a tremendous trap opportunity, and we could be looking at a double across the range. And you don't even need to go all the way across to the 100% target, although that target would be 1751. 1751 would be a double even if you got it somewhere in the, you know, I don't know, 850 zone, 875 zone. So if this thing can get anywhere below 8, it could be a tremendous trap opportunity for a short-term rally back up. You know, this is break even on the year right here, that blue dotted line, that's 1547. You could double it to 1547. So cut this price in half, cut 7 in half, or 15 in half, and you get 750. That could be an opportunity. And again, you could buy 100 shares at 750, and it'd be 750 bucks as an opportunity to be in, double, take half out, and now you have a free 50 shares for life. Who knows, this thing could turn into a $30 or $40 or $50 stock down the road, and you're doing it free and clear. So we'll see if this thing can build the energy to make a move down first and then back up the way. But 15 to 16 could be a tremendous target zone. That means if you can get in between 7 and 8, you can double it to that zone right there. So keep an eye on that key range. We'll see if it can happen. And again, it doesn't have to take long. It doubled it very quickly here. It doubled it very quickly here. This was like 95%, almost doubling there. It has the potential. And when you have a great key range you can work off of, it gives you a little bit more confidence in that pattern as well. This is one of the stocks here that one of our traders brought to the room last week, CVS. And it was perfect timing. We were looking at it at the beginning of this day here before the rally took hold. Price was still at about 54 bucks. And the idea was, is this thing ready to rally? And you can already see it's already rallied from 54 to 60, so it's already done quite well. But when you look at this one from a weekly chart perspective, and you can even go back 11 years back to the 2013 lows, 52.5 is my key level for this one. It's rallied off that level and reached 77. It's rallied off that level and reached 77. And over here, it just started the initial rally from this level. Can we go get 77? As of right now, 73.73 is VPOC, so that's the target. But we could also see some overflow to about 83. And this is based off volume profile. So this is the value high, that's VPOC, and the value low is the low of this rejection here. So value low is about 52s. And from that low, you're looking for a rotation back to value at 73 and then perhaps across the range toward 83. Again, that's a move that could take the rest of the year or into Q1. But I know many of you trade higher time frame accounts, maybe trade your IRAs. You can do leaps as well. Many ways to take advantage of a trade idea like that. But look back here. Look at that rejection right there. Now that's what I'm talking about. That's a weekly chart rejection. And that's a 4-day week, by the way. Monday of that week was Memorial Day. So that's a 4-day week, a tremendous rejection, nearly an outside week. Took out 4-week lows, lower low failure, right into our key level. Tagged the value area low. And when you see a reaction that significant right on that value area low, you know institutions are right all over that, right? They're right all over it. The algorithms, they see it, everything sees it, and they buy at or below value because they see that value is way up here. And over time, if you buy below value over time, you tend to rotate it back to value. And so a great opportunity to bring it back towards 73, and then the top of value would be here. That's 83. So oftentimes what this looks like is rejection, rotation back to value, chop around value, and then finish the move across the range to the value high. So any pullback could be a buying opportunity. Maybe it's a pullback into this LVN right here. That's 58. So say if this thing can pull back to 58, 58 could provide a plus 15 to 73 and a plus 20 to 83. Is that right? That's not plus 20. You get what I'm saying. So it could be a tremendous opportunity across the range there. So some thoughts right there on this one. Tremendous longer term opportunity. CVS, huge support level. Great trading range action. Again, you can go back 20 years on this one, and 52.5 is the low. Another one here I wanted to talk about was Autodesk. And I only got 2 more on my list here, and then I'll jump into NVIDIA and Meta. But looking here at Autodesk, and I didn't mark this one up just yet, but this one's come to a strong low. 195s or thereabouts. 190 has been the bottom of this zone, so 190 here. 195 is about right there, and you can see how that's been the bottom of the range. Well, we have ourselves a great impulse move that's happened. Kind of wild gap up here recently. Strong low, and then it gapped way up here to put in a strong high, and then it returned to the midpoint. By the way, the other key range here that we had put out actually rotated through the bottom and dropped into the 100% target, and since then it's kind of been an expanding range here. But a great drop there out of this one, and into the key range target there. I'm going to take this key range off just for purposes of cleaning up the chart a little bit. This is our next key range right here. And if we just did some rough math here, let's see, 222 is the high, and then you have a low of about 195. So that's about 27 points. 27 points. That's going to take you to about 250 as an upside target. Again, rough math here. 250 as an upside target. So you're taking this key range here, and you're looking for a move that takes you to about here. That's about equidistant right there. Rough math. And if you want to do a perfectly drawn out target here, I can again take the high, which is 22, 22, 21. You add it to the low right here being 195.32, and then you divide it by 2, and that gives you the midpoint here. So let's see. Yep. Oh, did it get it? Yep, it got the midpoint. So there's the midpoint right there. So it is indeed a key range. And then again, from the high of 220 221, you subtract the low, and that'll give you the range. The low of 195.32. That's 26.89 points. 26.89 points plus the high of 22.21, and you're getting a 249.10 target. Again, that's why I do my rough math. It's rough enough and it's close enough. 250 is the rough math. The actual math takes you to 249.10. 249.10. That's not a bad target here for this one here. Now this is a key range that's just now getting underway. Look at the key range low. Here's your 25% extension zone. If it can come into this area, perhaps a 190 to 250 target could be ahead for this one down the way. Again, you have to be patient to allow price to come to you, and then you look to trap and reverse up the way. So that's a newly developing key range right here for Autodesk, and that could be in play up ahead. Now this is one that I wish I would have seen a little bit earlier, Kava. This has been a tremendous rally candidate, great rounded bottom, big time break, awesome markup phase, tremendous strength. Well, it just cemented a new key range today. We love key ranges. Strong low, strong high. There's your midpoint, 85.60, and it hit it today. And it gave us a new key range here. And so again, this one's a very bullish stock. It has done tremendously well. This was brought to me in the trading room by one of our traders. And this, I guess, was likened to me as kind of a Mediterranean Chipotle. And as you know, Chipotle is a huge stock. And when you look at the website of this one, it's some beautiful colored pictures of food. I'm a little hungry right now, so if I look at it right now, I'm gonna want to eat it. But they look like they know what's going on right now. As we know, Chipotle has a great restaurant concept. Their stock has grown tremendously. This one could be along that ilk there, and we've seen this thing grow already. I mean, it's gone from $30 to $95, so it's already grown tremendously just since Q4 of last year. Now this key range forecasts a $120 target. So you have a key range high, key range low. That spread right there, forecasted higher, is $120. That's a great upside target. This key range could keep prices in check for a little while. But again, man, if you can get in somewhere down here, closer to 69, that's an almost double. That's an almost double. Maybe there's some sort of meltdown here and you can get 60, and be patient to 120. So this is a newly developed key range as of today, and a stock that's a fast-growing stock. Perhaps there's more upside that could be ahead toward 120 down the road. And as always, be patient and see if you can get that pullback and trap below the key range low. All right, let's get to NVIDIA. Man. And the question a little bit earlier was regarding NVIDIA and is it topping? Oh, man, NVIDIA. It's a monster. It's a monster, and again, it's hard to fade this stock, even if you think it's topping. Our last idea for this one was if it can get to 700 to 750, somewhere in that zone, there's a shot to take it up to the 1100 target here, and that was a key range target, and it just reached that target last week. Now that idea was based off of the key range here, that key range, and now we had 800 here as the 25% extension. But at the time, I was looking at kind of the VWAP and looking at the 100% downside target. So at the time, VWAP was around 700, and I said, okay, can we get to 700 or thereabouts and then turn it around and take it to 1100? And you can see VWAP kept creeping up, creeping up, creeping up, and there it is right there. Bouncing perfectly off VWAP, getting a low at 756, and then exploding to the upside. It got our target here, 100% target. I guess I can take that off now, and maybe we can find a new key range. But man, this is such a monster. It's hard to fade this one. But one thing I will say is perhaps we develop another range. So here's 975, here's 775, here's 870 or so, and then you're looking up here, this is 1175, 1075, kind of on the 75s almost. Where if we did pull back, maybe there's a shot to go fill the gap or reach the top end of this range, and then you're snapping right back. But it's hard to believe any selling pressure. I would say, yeah, that I was just about to mention that too, George. Good. We're on the same wavelength there. You got a big time split coming up here. A big time split. You can see it right here. It's a 10 for 1. Normally a split would tend to create a short-term top. So on split day, we may see a short-term top, and we could see a little bit of a pullback. But the best stocks will turn off that pullback and take out the split high and keep on going. This is something we mentioned with Apple when it split, something we mentioned with Tesla when it split, and some of these others. Usually a split may coincide with a near-term top, and sometimes it coincides with the top if it's a crappier stock. So this could be an opportunity here where maybe that split provides a little bit of a short-term pullback. But because a split is 10 for 1 especially, you're going to be dividing this price by 10, and you're going to be at 116 bucks as of right now. That's going to be super cheap now, right? For the layperson to come in and say, okay, I want to buy some down here. So I think ultimately what it could do is lead to new money coming into it and continuing to push it up. They have such a stranglehold on the industry. They are such a leadership role. And back here on the initial breakout phase, this was due to the AI craze, and we're now 1 full year, more than a year into that AI boom, and this thing isn't stopping anytime soon. Yeah. Yeah, Naru. I mean, man, 220 sounds cheap now, right? When you suggested it. And when it was falling back in 2023, you know, we got to do this now to the chart. My last key level was 115. And I said 115 is the bounce point, because if it don't bounce at 115, then what's it going to bounce at? And this is a market leader, blah, 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 blah. And man, did it make 115 the low. I mean, it's what we had been harping on the whole time, but when you see it and it happens, it's incredible. So, I mean, it's gone 10x from there. When it busted through the 200 level here, it's been nonstop. This thing is a monster. It's a monster. And so it's due for a split. And I think a split is only going to help the advertising of the stock price to be quote-unquote cheap. And that could bring new players into the fold, which could ultimately lead things higher. But usually a split coincides with a short-term high. So here's what I'm saying is this range here to here is your range. Now you're creating a new range up top. Maybe it gets back as low as 950 and fills the gap, and then you're working your way up again, you know, kind of like this. So it's hard to really analyze this one other than saying it's going up, you know. But maybe, and when I said this thing could reach 700 back here, I didn't know if it could do it, and it obviously it didn't. It went to 750. But it did get a pullback. It was a mature 1 month pullback. And I would say the next time you see a massive high range sell-off day, it's probably an opportunity to buy the close. And that's what kind of transpired out of this one. So this one's tough, man. It's going up. It owns the market. It owns the space. Everybody needs their chips. Everybody needs their stuff. And you just continue to grow. I mean, what are they? $2.5 trillion stock now? When we had just hit our first $1 trillion stock not a couple of years ago, now these things are $2.5 trillion. So it's wild. Right. I know. It's going up. That's it. I would say best case scenario, it fills the gap and provides a little bit of a bounce opportunity, and that likely happens after the stock split. So those are some thoughts on that one. It's just wow. Yeah. Now, last one here, Meta, and thank you all for being a part of this marathon session here. If you came in late or if you want to rewatch it, I'll have it posted here later on this evening, so it'll be up same day. Now, Meta also reached it had the same key range as Nvidia, where it was kind of a 1 or 2 day pullback, or two day pullback. A big time trap here. I know it was kind of blasphemous, but I had it as a sell candidate that day for an opportunity to bring it across the range. The very next day it closed above the mid, which kind of breaks the pattern a little bit, but it didn't. It ultimately dropped across the range. It had the reverse Tesla effect here, where on earnings they beat across the board, but Zuckerberg was not fluffy and said, you know, it might take a little while to get some returns on our AI investment, and so they took a massive gap down. And that gap was fortuitous for those wanting to be in, because it helped provide a nice low point and a bounce back. And if you look at where that gap occurred, it was the 100% target of this initial key range. Again, man, that's been the theme of this monthly outlook, are these key ranges and how beneficial they can be for guidance, entries, targets, etc. And so I usually try to find them where I can. But you know, when a market is just kind of going straight up like this, there's no key ranges that develop because it's going up. You need an impulse pullback, where if markets are dropping, you need an impulse rally. And that's what this 2-day pullback was. It was just enough. It was a 3-day high, low, and mid. And you see it right here at the 428. It's bounced. Since then, range bound here. Nice compression. That compression right there could lead to some strength. This one's kind of a messy chart for me right now. It's a really messy chart. It's not, you know, it's not very organized to me, but if I wanted to organize it a bit in my head, you got kind of this 476 level, which is the key range low. You got the 530 high, and then you have the 415 low. So you have this upper distribution, you have this lower distribution, and right now we're sitting right at the center of the range. So, you know, you have new highs that come up above, or if it fails, you go back and retest the lows. And it's just sitting right at the extreme. This is about as good as I can organize this one in my head here. But based off of how this thing was bought on the gap fill, or once it gapped and defended, marking higher and then defended, and then you have a strong low on Friday and a push higher, you know, things are generally moving higher. So I would say a gap fill here at about, what is that, 495 or so, 493. A gap fill there with the potential to perhaps work its way higher within the range. Yeah, this one's not very organized for me in my head. I would love another key range, to be honest. This one's good though. It's good. I mean, right now you can see the low at 476. So if it can reclaim 476 and stay above it, which has been a challenge here lately, you at least get the midpoint. That's 499. So in the very near term, perhaps 500 to 495 is a good swing target to the upside up ahead. But I'd like to see more build out of the data here to work with this one a little bit more. Sorry I couldn't be a little bit more help on meta there, but this one's traded a little funky here lately, especially after the gap kind of broke the chart. But great compression here, upward bias in the near term, a great shot to fill the gap here. The gap fill on this day would be 493.5, and then you have a 500 target here, 499.79 as the midpoint of the key range. Some thoughts right there. That's going to conclude today's monthly market outlook for June 2024. I want to say thank you all very much for joining me here today. Thank you for your participation and providing some charts to look at. I do want to remind you here to go to pivotboss.com/profits. If you want to click the link, you can click the link here in the chat. This is a great offer here. Some very powerful trading blueprints along with a ton more. I mean, I'm underselling tremendously here. Underselling it a ton. But new members here also receive a free month in our trading room. I love our trading room. It's you know, again, I don't really advertise the room at all. Actually, I don't. What I like is just the quality of members that's in it. A great environment, friendly environment, and all working toward the same goal there. And I think you'll enjoy it. And a ton of extra training at the trading room as well. We have our 10-part executive training series. We have our boot camp series training. We got indicators available for multiple platforms. And again, you get a free month here, and you can take advantage of this flash sale. The sale ends June 11th, 29% off. it's about as good as it gets, and a ton of content already at the Swing Trade Pro 2.0 dashboard, in addition to the live sessions coming up next week. The live sessions begin June 12th. We'll do a live session from 3 to 4:30, and then we'll do some live trading room sessions here as well per the schedule. If you can't make any of these, again, these are all recorded and posted same day. All right, I appreciate all of your help. Thank you for the kind words there, everyone. Thank you for joining me here today for this extra long monthly market outlook. We'll do it again soon. Take care, and I'll see you in the trading room.